Hey everyone, in this video I'm going to be showing you how I find my pair characteristics. So a few of you might not quite understand what I mean by pair characteristics, and what I mean is the way that a currency pair moves. So for example, Aussie dollar behaves very differently to euro yen. So it's important to know how each currency moves so that you can capitalize on them the most. I'll think of a few examples now. That these are the things that you might want to take away from this exercise. So I know that pound dollar is very volatile, so I need to wait for clear momentum before I'm looking for a trade. I know that on yen pairs, they're more prone to having larger wicks, so I have a bit more of a tolerance for that. Whereas on Aussie pairs, I prefer to have smaller wicks. I know that euro dollar is prone to having fake outs. That's the type of thing you're going to take away from this exercise, an exercise called naked charting. So I'll walk you through step by step, and I'll show you exactly how I find my pair characteristics. If you guys enjoy this video or find it useful, make sure you subscribe and let me know in the comments if you'd like to see more of this type of content. I know you really enjoy my chart work. So the way that we're going to start off is we're going to mark the wherever there's a trend change. So I do this with the arrow tool, so I'm going to start off up here, and then every time we break this high, I'm going to put a marker here. So here's the high coming back, here's the low, so then we broke the low. I'm just going to show you briefly exactly how this goes. So okay, I have missed one here. Okay, I did do that a little bit wrong, sorry, confusion. So we have the high, came down, here's the low. So we counter trend, broke the low, making this the new high. Then as we broke the high, there we are, there we go, bit better. So you can see this is a bit of a range, you can see it's quite choppy. Come down, broke the high again, new high, making this the new low, then we broke the low, making this the new low, then we broke the low again, there we go. Okay, I've got it. It's hard it's a bit tricky at the beginning. So low, making this the new high, low, making this the new high, broke the low, making this the new high, broke the low, making this the new high. Okay, then we broke the high again, oops. So I'm going to go through price action now, and I'm going to mark off all of these, and the purpose of this is so that we can see just how volatile price action is. So you can see here, in general, we want it on a downtrend. We weren't breaking the highs at all. So if you were to follow the Guerrilla strategy where we're managing below we're managing our stop loss above the highs or below the lows, then you wouldn't have been taken out if you took a trade somewhere up here, because it wouldn't be breaking the highs at all. You would have been taken out at this point when we broke this high here. So yes, I'll go through now, I'll time lapse this so you can see it done really quickly. Okay, so I've marked off all of the trend changes now. I get this this part specifically, the rest is easy, maybe a little bit confusing if you're not in Guerrilla Trading, because it does take a while to understand highs and lows. It does get a little bit confusing. But I'll tell you what all this here, what we're looking at here. So each arrow signifies a trend change. So they're at the tops and the bottoms of a move. So you can see when we have several green arrows in a row like this, we're generally in an ascending channel. So you can see here we're a descending channel, sorry. So you can see here with 3 red arrows, you can see we've got a clear ascending channel, we've got a little ascending channel here, ascending channel here, descending channel here. So at a glance, I can see that price trends quite correctively. We don't have very many scenarios where there are lots of red and green arrows in this, like, concentrated in the same spot. So you can see here we had a bit of a range where you wouldn't have really wanted to be involved because price is breaking both highs and lows. Whereas you can see over here we have very few red arrows compared to the green arrows. So you can see we're quite clearly on a downtrend. Over here, for example, several red arrows, several green arrows. So you can see we're trending quite clearly. Okay, so the next step is to mark off all of the big impulsive moves with a box like this. So you can either use the highlighter tool, but I like to use a box. Don't know, it's just my preference. So I'm going to go through price now, and I'm going to mark off all of the big moves, and I'll be right back when I'm done. Okay, so I've marked off all of the impulses now, all of the big impulsive moves, or the ones which I consider to be fairly impulsive anyway. So what we can see immediately from this is that we often get an impulsive move after some kind of channel. So quite interestingly here we have a descending channel, impulse, another descending channel, and then an impulse to the downside. Now this isn't something which I associated with Aussie dollar at all. I associated this type of pattern more with euro dollar, where we get a channel and then an impulse down, because normally you get a channel and then an impulse in the opposite direction. You get some kind of move like this. But it's quite interesting to see that in fact on Aussie dollar we do often get this type of move. Now obviously this is just 1 month of data. I like to confirm these things to myself after about a quarter of data, so 3 months of naked charting. And we write a summary at the end of every month, so if you see this is a reoccurring theme, then it's something that you can add into your trade plan and something that you can consider in future. So I can see another scenario here. We had a descending channel and then a further impulsive move down, but here as well, ascending channel, impulse up. Very interesting. So you can see a lot of the time it's descending, impulse up, ascending, impulse down, descending, impulse up, ascending, impulse down. So you can see what I mean by trending correctively. So now we're going to really connect the dots here, and we're going to draw on all the trend lines. So I will come over here and I'll show you exactly what I mean. So I'm going to be drawing all of the ascending channels and descending channels. So I can see already here there's a descending channel, over here descending channel. So I'm going to go through price and I'm going to draw off all of the channels and ranges and those type of moves that I can see. Alright, so I've gone through price action now. So I start off zoomed in and I draw in the smaller channels, and then I zoom out and I do the larger channels. So in this case there was this overall larger channel between the 12th and the 21st of February. So I don't know about you guys, but price action has already just become a lot clearer to me. You will end up noticing more channels and ranges that you might want to draw out later on, but that is fine. You can contribute towards these later. For example, I can see what looks to be another little channel right here. It's a little stubby channel. Okay. So yeah, you can already see quite a big difference. You can see where the channels lead into impulses. It's just in general you can see price action a lot more clearly. So the next stage is to take the brush tool and you want to draw out all of the wicks that you can see. So I'm going to go from the beginning here, and I'm going to draw out all of the wicks that really stand out to me and it look quite significant. So these might be, it doesn't matter if they're at the tops or the bottoms of moves, you just want to draw out all of the wicks that stand out. Triple wick. And you can see more often than not they are in the same kind of places. This is why you want to avoid price action if you see a big wick like this. You don't want to be involved when there's a big wick. That's a warning sign. Yeah, so I'll go through price action now and I'll come back to you when I'm finished. Alright, so I've just drawn off all of the wicks that have caught my attention. So you don't have to draw a circle around every wick, just the ones that really catch your eye. And again, similarly to the trend lines, you will notice wicks as you're going through later on. So this final stage is arguably the one that takes the longest, but this is also where you're learning, this is where you're taking away pieces of price action. So this part is you want to take this tool where you can do a speech bubble, a call out it's called, and you're going to want to write down everything that you see. So for example here I can see large ascending channel, and then we had an impulse. The impulse was at 1 AM, which just happens to be during impulse 1 AM during the Asian session. So I imagine a lot of these impulses will be, or the majority of them at least, will be during the Asian session. So you can see this is in the middle of the night, this is late at night, late at night, late at night, late at night. So you can see a lot of the time when we get a big impulsive move, okay, this one was more around lunchtime, same with this one, but you can see a lot of the time we are getting impulses towards the middle of the night. So these are the type of things you're going to be taking away as pair characteristics. So I know that I might not want to be involved in a trade if I think a channel is going to break until we're approaching the open of the Asian session, which is towards midnight, I think, like 1 o'clock. So yeah, I'm going to go through now and I'm going to add a whole bunch of speech bubbles. Okay, so I've gone through price action now and I've written down a bunch of the things that I've noticed. Doesn't have to be anything specific. Quite often I'm looking at things like where we're getting wicks, when we're getting an impulse, like what's happened before an impulse, what happens before a channel, like channels into channels, where we're getting ranges, what happens before a range, after a range. These are all the things you want to consider. What happens before and after some kind of variable. The variables I tend to consider are the wicks, whether we get an aggressive retrace, various candle patterns, like double tops and double bottoms, maybe like fake outs. For example, here this looks like a fake out. We had a big move up, wick, big move down. So this wick was the warning sign for the fake out. Same thing over here, there's a bit of a fake out. It looked like we were going to have a strong move down, but in reality we got an aggressive retrace, and these two candles here showed me that price actually wanted to go the other way. That momentum wasn't continuing to the downside. So I'll go through price action really quickly with you now, and we'll see what we can spot. So I noticed that small descending and ascending channels worked out most of the time. So I would consider those high probability, which is something that I've already gotten written down in my plan. But small channels worked out really well on this pair. We regularly got large wicks at the tops and bottoms of moves, which is typical on most pairs. we had an aggressive retrace here, so I can tell it's an aggressive retrace. This candle I would have been content with, but this one is a quite thick candle, and we've nearly taken back this whole candle here with just this one, and we had a solid close. So this is a warning sign for this big move up. So you might have wanted to be involved, you might have wanted to get involved in a buy here after seeing this candle, because that shows a lot of momentum to the upside for me. Also, a warning sign I had, because remember before I mentioned how we had this descending channel which broke to the downside, which I thought was quite unusual, but we had a warning sign of it here with this aggressive retrace, which is a huge aggressive retrace with a solid close as well. So for me, that's a warning sign there that a move like this was coming. It shows you're trying to measure where momentum is, and candles like this show that momentum definitely doesn't want to go up. You know. Here we had another aggressive retrace. This is called a double Marubozu, where it's like two thick solid closed candles next to each other, and this retrace candle was very aggressive because it was actually larger than this candle here. So that showed me that price didn't really want to continue down, and funnily enough, after that, price did begin to slow down, although we did continue to the downside. So that's something to note, that aggressive retraces don't always mean that we get a range or a reversal. It just means most of the time. So that's why you want to do this on a few months worth of data, because you know, 1 month there may be some crazy news or something that, like for example, you don't want to really be doing this during 2020, because that year is obviously a crazy one with COVID and things. So you want to be doing this in like 2019, 2018, more of the traditional years. So we'll keep going through here. We had a triple wick which showed momentum did not want to carry on down, and we actually went descending into an ascending, so kind of going sideways. So not exactly price action that you really want to be involved in. Oof, I slipped then. Another small channel here that worked out pretty well. Another small ascending channel that worked out well. You can see the trend where small channels seem to work out quite regularly. Here we had an impulse at 2 AM, but we had this large wick and aggressive retrace before, so this shows me that maybe price doesn't want to continue to the upside, and this ended up being the I suppose the foundation of this overall larger ascending channel, because this kind of formed the original top, and then we price kind of traced along these later on. It built this you can see, for example, I'll draw a line here. Every time we broke the high, we retraced, and momentum struggled to continue moving up. Same thing here. We broke the high, and as we did, price struggled to continue moving up. Broke the high, so this to me shows a larger ascending channel. Same thing to the downside. We had this big wick here, and then this move here kind of set the tone, I guess. Yeah, it set the outline of the channel, is what I'm trying to say. Outline is the word I was looking for. But yeah, I hope you can kind of see what type of things I'm taking away from this. So what I'm going to do now is I'm going to write a summary, and I'm going to see what I can take away from all of this data that I've gathered. So I noticed that small channels are really high probability, channels within channels are really high probability, which you can see here, a channel within a channel, and small channels are littered all over the place, and they tend to work out quite well. Most of the volatility was around the Asian session, which we can tell because we highlighted a lot of the volatility with the impulses. Price tended to trend very correctively, so it would go and break the high, break the high, break the high, break the high without breaking the low, which is perfect. I really like those type of pairs because we can follow the trend quite easily without being taken out. Although we did get several fake outs, so you need to wait for clear momentum. For example, here it looked like we were going to come down. This was clear momentum really, but we did get a bit of a wick and an aggressive retrace, and it's the same thing over here. We got a huge wick, so the price does tend to fake out a few times. And oh yeah, so I said avoid trades with aggressive retraces based on that. But I'll show you one of the other pairs which I've done this on. So I've done this on pound dollar, and you can see, well, you can see all the notes that I've written here. But the more that you do this, the more specific you can get. That's the aim. You really want to find really specific things that are kind of niche to that pair. So there you go, guys. Thank you for watching. I hope you've taken some value away from this. You can see that the aim is to take really specific bits of information about each pair, and then you can apply that to your real trading, and you can avoid those really specific scenarios. But you can see all the pairs behave really differently, which I find so interesting. I mean, it makes sense. There are different countries behind each one, so yeah, fascinating. Thank you for watching. Let me know if you enjoyed this video. Let me know how your naked charting goes yourself if you end up trying to do this yourself. And yeah, have a great weekend, everyone. Thanks for watching.